So good morning, everybody. I will now discuss the banker-customer relationship. I will discuss the banker-customer relationship. I will share the brief PowerPoint that I have made in relation to this, and I will try to discuss the various aspects here. So as we have already seen, what is bank? That becomes very important here because that is what the definition of banker is. Customer is someone who enjoys the services of a bank. So these two items and what are the various facets of the relationship are something which is very important. And depending upon the kind of transaction the bank enters with the customer, the kind of relationship also undergoes a change. So that we will try to cover in this particular lecture. First, what is a banker? The banker is not defined in the Banking Regulation Act. However, in section 5B, the definition of banking is there. So an entity which is engaged in the business of banking is a banker technically. Section 7 of the Banking Regulation Act says that a person can use the word banker. For using the word banker, that entity should be doing banking business. So we can combine these two and say that a banker is someone who is doing the business of banking, and business of banking is something which is defined in section 5B. The other businesses which a bank can do are indicated in section 6. Those businesses that they cannot do are those which are there in 8, 9 and 8 and 9 sections. This is what is a banker. So basically, banker is an institution which is engaged in the business of accepting deposits from public, lending or investing funds, then issuing, paying, and collecting checks for its customers. This incorporates the element of repayable on demand, withdrawable by check, draft order, or otherwise. So basically, check collection is a very important part of what a banker does. Next, we will see what is a customer. So similarly, just like banker is not defined, a customer is also not defined in the Banking Regulation Act. But basically, what you can think of is someone who has a business relationship with a banker. So what is this kind of relationship that you can have with a banker? Either it's a deposit, loan, or some other relationship. So is one transaction enough or many transactions are required? First transaction, will he become a customer? So a casual transaction that is being conducted with whether it will make him a customer or not, all these resulted in the kinds of definitions that are there for customers. One of the definition which is more relevant is that of Paget. He says conditions for meeting the criteria of customer of a bank is he should have an account with the bank, which is basically something which is understood. The second is course or habit of dealing. So there are certain judgments where they have held that even a single transaction is also enough. It is not necessary that there have to be a sequence of transactions for the customer relationship. And the most important part is the dealing is in the nature of regular banking business. Suppose I am going to open an account and I give a check. So there is one transaction, but still it becomes banking business and I will become a customer for the bank. Then Hart has indicated that one who has an account and for whom the bank habitually undertakes to act as a banker. So here also he says there is a habit of acting as a banker. Second is that he should have an account. So these two criteria basically are important. Number of and the transaction should not be like a vague transaction, but it should be a transaction which is a normal banking transaction. It should not be a one-off kind of a transaction. It should be something where there is a kind of an understanding that more number of such transactions could happen. Okay. Then why is this banker customer relationship important? It is important because the person, if he is collecting a check for the customer, only then the bank will have a protection as a collecting banker under section 131 and 131A of the Negotiable Instruments Act. So from that point of view, why customer is important. Otherwise, for all the other purposes, a customer is not something which is very, very significant because the other kind of relationships are what are important. Okay, so the different kinds of relationships that you could have are summarized here. First, it could be a debtor-creditor relationship. So what is this debtor-creditor relationship? That is, someone gives money and other one receives money. So the one who is giving money will become a creditor, someone who receives money will become a debtor. So in case of a deposit account, the customer gives money to the bank. So he is the creditor or the lender and the bank is the debtor. In case of a loan account, bank is giving money to the customer. So in that particular case, it is the customer who is the debtor and the bank becomes the creditor. The other kind of relationship is principal and agent. And what are the transactions where this relationship operates? First, utility bill payment. So I am entrusting the function of payment of my telephone bills, payment of insurance premium, etc., and collection of dividend warrants. I am indicating. So all those kind of transactions where I am entrusting agency to the bank. The other cases are I will ask them to collect checks on my behalf. So they will do that. Then dividend warrants encashment, I am entrusting to them. It is as good as collection of check only. Then bill of exchange, promissory notes, etc. Trading in securities. So all these transactions that I am doing, the bank is acting as my agent and I am a principal here. The other kind of relationship is a trustee or a beneficiary kind of a relationship. It is basically a fiduciary relationship. Then entrusting money for payment to some other person, then keeping things in safe custody. So these are kinds of transactions where the beneficiary is someone. The bank is trusted and the article or whatever is kept with the bank. So here the bank acts as a trustee and the customer or other person becomes a beneficiary. Then the other relationship which is very common is a bail or bailee relationship. The most important thing here is safe deposit lockers, then safe custody of goods, documents, securities. Then there are sealed covers which some people keep with the bank. So these are, and then custody of goods, then gold which is pledged with them for a loan. Then they have taken possession of a vehicle, and this vehicle is supposed to be kept safe by the banker. So all these kind of relationships where the goods are kept by the banker for a specific purpose, that kind of relationship is a relationship of bailment, basically a contractual relationship. We'll discuss all this in detail while we are dealing with it also. So here the banker, because it is taking the goods on bail, it is a bailment, it is a bailee. Because he is giving it, entrusting it to the banker, the customer becomes a bailer. Then pawnee and pawner. Pawning is nothing but a transaction where I am giving movable goods as security for borrowing from the bank. So here these movable goods could be gold, jewelry, etc. So those kind of things. In this particular case, I am keeping it in pawning them with the bank. So I am a pawner, the banker is a pawnee. Second, the other kind of relationship is a mortgagee and a mortgager. The one who mortgages, here in this particular case, for the loan to be given, I am giving something as a security. That security is mortgage of immobile property, etc. Generally immobile property. So here I am giving the property, so the customer becomes a mortgager. He is receiving property and he is giving money, the banker becomes a mortgagee. The other kind is lessor and lessee. So you could have a equipment leasing transaction, or you could have a safe deposit vault or a locker where the bank gives you certain space on lease. So you pay the lease rental, it is as good as yours. But if you possession is yours, but ownership is with the bank. That is the difference between leasee and the lease and hire purchase, basically. In case of a hire purchase, the ownership is yours and the possession is yours. In this particular case of a lease, the ownership is the financiers and the possession is given to the person who is taking that on lease. So example is here, the bank is a lessee and the customer is a lessor. And finally, guarantee. In this particular case, guarantor is the bank and receiver of guarantee will be the customer. Generally, bank guarantee for works, etc. are taken. So in this is a transaction of bank. So all these kinds of relationships you could have between banker and customer. So now we'll slowly go through these relationships. First, debtor-creditor relationship. So in case of a deposit account, basically a depositor is an unsecured creditor. So he is the person who is providing money to the bank. So he is a creditor. The banker is receiving money. He is a debtor. So what are the obligations that are there for the deposit holder? One, he should use the account as per the terms. That is, number of withdrawals that are there, how much balance should be kept, etc. All these kinds of requirements will be there. Those terms and conditions, that he has to pay a service charge, all those conditions, he has to use the account in accordance with those terms. Then issue check only when there is a balance in the account, or if there is an arrangement of overdraft. But this is something which is in his own interest that he should do. But if he issues a check where he doesn't have a balance, then automatically the 138 proceedings and other things he will have to go through. So as an obligation, I should maintain balance before I am giving a check. Otherwise, I will face consequences. Then other requirement of charges, minimum balance, limits of withdrawal, periodic KYC updation, etc. are there, which the customer is obliged to perform. Otherwise, the account will be blocked. Then there will be stop on transactions, etc. So these kind of issues will be there if the customer obligations are not met. What is the banker obliged to do? It is supposed to receive money into the account. Then it has to allow withdrawal up to the balance or limit. Then it has to collect checks on behalf of the customer. Then it has to pay checks up to the balance, or if there is an agreement for overdraft, then as per that arrangement up to the amount of overdraft that is sanctioned for him. So as long as the deposit account is in plus, that is, it is positive balance in favor of the customer, the account is, the relationship is, the depositor will be the creditor and the bank will be the debtor. The moment it becomes overdrawn, the banker will become the creditor and the depositor will become the debtor. And what happens if the banker is unable to pay the depositor? So the situation like these do arise, and in those cases, to provide a protection for them, there is something called the deposit insurance, which is there. So basically, if a bank comes to that stage, it is as good as a failed bank. Like even now, you have situations where Lakshmi Vilas Bank, there is a serious problem, and that is likely to be taken over by some other bank. So these kind of problems, deposit insurance is basically is in place to provide protection against these kind of eventualities. Then bank is said to be a privileged debtor. Why? I am lending money to the bank, but I have to go to the bank to draw money. I have to go to the bank to give money, put money into my account. This doesn't happen in normal commercial transaction. Whoever is borrowing money, he will come to you. But here, the bank is borrowing money from you, but you will have to go to the bank and you will have to do. The second thing is, bank is obliged to pay only when demand is made or on maturity. So if it is a current account or a savings account, whenever you demand, it is obliged to pay, or on maturity. But where you don't demand, the banker, or there is no standing instruction, the banker has no obligation to pay. Then the demand has to be made only during the working hours. That is, timing of the bank or the branch is very important for withdrawal or check being deposited, etc. Then withdrawal should be only in writing or through approved instruments. Earlier it used to be check or a withdrawal slip. But now you could have an ATM card, you could have net banking, you could have mobile banking, you could have UPI and all kinds of things. But we have not reached a stage where there can be oral instructions for withdrawal. Then bank can combine accounts. So an FD deposit for recovery of a loan, etc., all the deposit accounts can be combined by the bank. But individual accounts, in case of commercial transactions of lending and borrowing, you can't combine. Every account is an individual account. So this is something which is there specifically for banks. Then customers usually claim part of the amount only and not the full amount. And that is the liquidity which is available with bank always. And that is the reason why it is in a position to invest this money that is kept even in savings, deposits and current accounts. That is the reason why a bank is very interested in having current account and savings account, because you will deposit money, you won't draw it. And this money which is available is at a very low interest, or in case of current account, no interest. So that is the fund which the bank can use, and the net interest margin it can get out of current accounts is substantial, and that is what makes it profitable. Okay. Then limitation period of 3 years operates not from the date of the deposit or date of loan as in case of commercial transactions, but it is from the date on which the demand is made for repayment. Then rate of lending from a bank is generally at a lower rate. Then bank as a creditor has to repay money immediately. Others may or may not. So if you are giving money to another person and you say that you give me back the money, he may or may not give. But if a bank may not give, then there is a requirement under which license can be cancelled. Or license is issued only when it is satisfied. Reserve Bank is satisfied under section 22 that a bank is capable of paying its present and future depositors. Only then it will be in a position to Then bankers. So these are some of the reasons why bank is a privileged debtor. Then the next one, principal and agent relationship. Agency is a special contract under the Indian Contract Act, and this agency, the terms which are applicable, the provisions of Indian Contract Act in relation to agency are applicable to banker customer relationship also, which is in the nature of agency. An agent is what? A person who is employed to do any act for another or to represent another in dealing with third parties. So in case of, imagine, the person who is entrusting is the principal, and the person for whom the person who acts on behalf of the principal is an agent. What are the ways in which a bank can be made an agent? One, by executing a power of attorney, and this has a stamped, witnessed, and a notarized document. It's a very what is it? It's a particular pro forma. It has to be there for a power of attorney. What is the mechanism? This has to be registered, recorded, etc. Or it could be a standing instruction, like every month you pay my insurance premium. Then, or it could be an electronic mandate, like your for payment of your bills, etc. So, or it could be entrusting your money with them and saying that you do portfolio management for me. So these are the areas where a principal and an agent relationship is there between the banker and the customer. So now, what are the bank's duties and what is the diligence that it has to exercise while being an agent? First, it has to ascertain the authority of principal and whether the obligations are clearly stated. Basically, it should know whether the person who is entrusting him with the responsibility, whether he is the right person or not. So that has to be ascertained. And then what is it that is expected of the bank as an agent? That has to be very clearly stated. It has to be seen whether it is clearly stated or not. Then once this is done, this mandate has to be recorded in the account. Then they have to act in accordance with the duties of an agent. So what are the duties of an agent? They should act in good faith. They should exercise reasonable diligence. Then they should not be negligent. Then they should exercise standard of care and skill expected of him. So if these requirements are met, then the agent is doing his job well. Otherwise, liabilities will start. So operating, suppose he is indicated to do a business in a particular way, then operating and conducting business of the principal strictly in compliance with the directions, or if there are no directions, as per the custom of doing business of the same kind. If they are doing that, they are protected under section 211 of the Indian Contract Act. The second thing is, what is the standard that is expected of him? That is, he must possess as much skill as a person in business is normally exercising, unless notice is given of the want of skill. So if the banker doesn't know how to do a particular thing, you should tell him beforehand that I don't know how to do this. In that particular case, it is okay. Otherwise, you do this, the customer entrusts it to the bank as an agent, to be his agent for that particular thing. And if he does it in whatever way he feels like without knowing it, then the agent will be liable for any loss that is caused. So this is the requirement that is there, that they should give a notice of the absence of skill. So in which case, if there is some problem that is there, they are protected. So what are the liabilities that are there? If the agent does not act as per the direction or as per the custom where there is a business that is supposed to be performed, then they will be liable for any loss sustained by the principal, section 211 of the Indian Contract Act. Then second, if not acted with reasonable diligence and does not use such skills he possesses, then he has to be compensated for direct consequences. So he is supposed to be compensating only for direct consequences. Direct consequences of what? Of the neglect, lack of skill, or misconduct. And it is not applicable for indirect, remotely caused loss or damage. So there has to be a direct relationship between the loss and the absence of care or absence of skill or misconduct or negligence on the part of the bank. Only then they will be liable. The second kind of relationship is a fiduciary or a trust relationship. So one who entrusts the property is the one to whom the property is entrusted is a trustee. In this particular case, the banker will be the trustee. The beneficiary is the one who is going to derive benefit out of the thing that is entrusted. What are the examples? One, they say that you will have to put this money for the benefit of, say, the successor of so and so person, or this money which is there in the trust has to be used for consumer education, like your deposit education and education and protection fund. So that fund is specifically meant I am entrusting it to the bank. So in that particular case, the mandate is specific, and that special instructions have to be complied with. When the customer entrusts something with special instructions, he is trusting them and he is imposing a fiduciary responsibility on the banker. If the general duty of fiduciary relationship is that they should not disclose, a banker should not disclose the happenings of a particular person's account unless it is required by law. So example here is credit information. If a person's account is going normally, then there is no there is a what is it? There confidentiality of account has to be maintained. But if the account becomes non-performing asset, then this has to be reported under the Credit Information Companies Regulation Act. Similarly, a husband and wife also, if they are even if they are husband and wife, a husband's account statement cannot be given by the banker to a wife. Why? Because he is having the balance and he is under the trust, saying that he will maintain confidentiality of that information. That sanctity has to be maintained. So it could be specific or it could be general. Then banker, because of the trust that is there in the relationship, if the banker exploits it, then you know that it comes under the concept of undue influence, and anything that they get done through this kind of fiduciary relationship being exploited, and if it is without consent, it is treated as a voidable transaction. So if the consent is by undue influence, it will be presumed, and the banker has to prove it that he has not used his fiduciary position of influence to unfairly get advantage. This is as far as the fiduciary relationship is concerned. Then the next kind of relationship is a bailee and a bailer. So here, the transaction contract that is there is a contract of bailment, that is entrusting goods for a specific purpose to be returned after the purpose is fulfilled. It is under section 128 of the Indian Contract Act. It is a special contract. The same provisions that are there will apply to the bailment, where bank is the bailee. So the one who entrusts is the customer, is the bailer. In this particular case, the customer. One who receives in trust is the bailee. That is the banker. If he does it for a fee, then it will be a bailee for, he will be a bailee for reward. If he does it for free, then he will be a gratuitous bailee. Example, safe deposit locker, safe deposit vault, safe deposit custody of securities, documents, then safety of gold documents as security for loan. If I am taking a loan under equitable mortgage, I am entrusting the securities to the title deeds to the bank. So here the bank holds my title deeds as a bailee, and it is supposed to be keeping it safe, and the moment I am paying back the money, it has to give back the documents to me. So these then suppose I don't pay the vehicle loan, the bank goes and takes possession of my car, and that car is lost by it. Then the car that is taken, repossessed by them, is kept as he is holding it as a bailee. Tomorrow, if I go and pay back the money, I will have to be given the car back. If they fail in it, they will be liable. The difference between agency and bailment is agency can bind the principal, but here the bailee cannot bind the bailer. The only obligation that is there is whatever purpose with which whatever is entrusted to him, they have to ensure that that purpose is fulfilled, and after the purpose is fulfilled, they will have to return it to them. So what are the duties of a bank as bailey? One, to take reasonable care of the goods bailed. So what is reasonable care? As much care as an ordinary man of ordinary prudence would take on his own goods under section 151 of the Indian Contract Act. Then he should exercise reasonable care and diligence while holding these goods. Then after the purpose is fulfilled, he is obliged to return or deliver the goods. Then second, the third, he has to deliver increase in profits on bailed goods. Suppose there is any what is it, gold, so the value of the gold has increased, then he has to give back the gold. He can't say that I have held it when it was 100 rupees, now it has become 150, so I will only give you 100 rupees worth of gold. That is not something that he should be doing unless there is a contract to the contrary. If someone has a contract expressly stating that I will hold it for the same value, if there is an appreciation, then I am going to take the gain out of appreciation, then they can do. But otherwise, any profits of the goods that are entrusted, it goes logically to the person who has entrusted the goods when he is receiving it back. Not to make unauthorized use of the goods bailed. So I entrust some gold to him. This gold he cannot use it for his own purposes. Okay. The second thing is he is not supposed to mix bailer's goods with own goods without the consent. Example, there are there are gold bars which are there. So he combines gold bars which this person has entrusted and he's in the bank's own holding, and combines the whole thing, and then the entire thing is lost. That loss, it has to be borne by the banker, and he can, if it is supposed to be kept, suppose he is having cash and he wants to keep that cash separately. In that particular case, the charge of cost of separation has to be borne by the bailey. So these kind of transactions are generally, ideally speaking, he should keep it separate. He should not mix it. Then liability of the bailey banker. The bank is liable if it fails to deliver goods bailed as instructed. Then he is also liable for compensation if there is a loss of goods or loss to goods, which is caused because of mixing of bailer's goods with its own goods. Then they are not liable for loss, destruction, or deterioration if he takes reasonable care. Then if he enters into a special arrangement exempting the bailey from loss due to fault or negligence. If the person expressly at the time of entering into the agreement itself says, if you are not able to manage it, and if the people who are there, if they are incompetent also, I don't have a problem, but you keep it with you. If he says that and gives, then if there is any loss, then he will not be, the bailey will not be liable. So in this particular case, it may so appear that it is an unlawful contract or there is no consideration that is there. You are going to keep it properly is the consideration which is there, for which fee is being paid. All right, okay. So if there is no consideration, will it be a void contract? So it is held that such contracts where you say that even if the inefficiency or negligence is there also, no problem, that such a contract is valid and it is not unlawful or without consideration. Then rights of the bailey banker. First, any expenses of bailment incurred on bailment or the fee that is supposed to be levied, that has to be paid if it is not a gratuitous bailment. Second, compensation from bailey if loss is sustained because of not receiving the goods back. I indicate that I am going to keep it with you for 3 months, but he is keeping it for eternity. Then if there is a loss, and if there is another holding up of the place and other things, then they can say that this is not something that I have agreed for, so you compensate the bank for it. Then lien on goods till remuneration is paid. So if the fee is not paid, then they will hold on to the goods. Only when the fee is paid will the goods be received. So till the time the payment is received, they will exercise a lien on the goods. Then if there is some wrongdoer whose negligence because of which the goods have been have suffered a loss or damage, the bail, according to bailment, the bailer is supposed to be made good. He will make good, but the bank will have a grouse or a suit against the person who has caused a loss. So in that particular case, the suit against the wrongdoer, the person should be in a position to permit the suit to be carried out. So the suit against wrongdoer against goods bailed is another right of a bailiff bank. It is almost like your what is it, novation or something like that. So a party will change. Okay. Then rights, pawnee and pawner. So where goods are placed as security for money borrowed till it is repaid, and once it is repaid, the possession is redelivered. This kind of a transaction is what is called pawn. Generally, your pawnbrokers and gold loan people and others are there. So they are the ones who engage in this function called pawning. And now gold loans are a very popular product for banks also. So in here, the customer is delivering goods and receiving a loan. He will be the pawner, and the bank will be giving the loan and receiving the security. He will be the pawnee. Gold loan or jewel loan is a general example. What are the rights and duties of bank? Rights and duties. The rights of the bank as a pawnee are to retain the goods till he receives payment. Then to receive payment for extraordinary expenses for keeping the goods. So something like a demurrage or something like. So if it is keeping for a long time, then he has to put a security for all that purposes. So in that case, they can ask for more the extraordinary expenses that are incurred for keeping the goods. They can ask for compensation for that, payment for that also. Then to sell the goods in case of default of payment. So you don't pay the money, so I can't keep it and I will be selling it off. And whatever compensation I will get, and whatever is remaining after my recovery, I will pay it back to you. Then duties of the pawnee: act with due care and without negligence, because it is entrusted with those with the pawned items. Then safeguarding the goods received from loss, theft, or misappropriation, and finally returning the goods on payment of amount borrowed. So these are the rights and duties of pawnee. Then we come to the transactions of lessor and lessee. Here the transaction is that of lease. The one who transfers possession for a fee is a lessor. Okay. The one who enjoys possession during lease at a fee is the lessee. Example, there is a safe deposit locker. So this safe deposit locker or a vault is a place which is there of the bank, but you take it on lease and you are provided that space. So this is a transaction of lease where the bank is the lessor and you are a lessee. If the rent is not paid, they can they can throw your safe custody vault, vacate it, and then use it. So this is as far as the lessor and lessee is. The other kind of relationship is mortgagee and mortgager. So here, mortgage is basically a transfer of interest in immovable property as security for funds borrowed. So here, the one who receives money and transfers property is the mortgager. Because the bank is lending money and it is receives property and is lending money, it is a mortgagee. There are three types of mortgage that are there. One is a simple mortgage where there is a mortgage deed. Registered mortgage is there is a mortgage deed and this mortgage is registered with the authorities. Then the third one is equitable mortgage, or it is called mortgage by deposit of title deeds. Here the original title deeds are supposed to be deposited. This is a very popular common mechanism of mortgage. Then to check the title and interest of property offered is very important to prevent multiple lending. So on the same house, there could be more number of people to be taking loans. So or already that is there is a mortgage on it. So how do you check and ensure that against a particular property there is only one loan, or there is what are the people from whom he has taken loans for that? For that purpose, it became important once the securitization of securitization and reconstruction of financial assets and Enforcement of Security Interest Act came into being in 2002, basically for dealing with non-performing assets in case of secured loans. So the security that will have to be registered, and for registration of it, there was an organization called a central registry which was set up, where all the secured loans, the securities will be notified there. So if anyone wants to give a loan to check against the security, he can go and search that database to see whether against this particular property, who has lent and how much is the money that has been lent. That detail is captured. So basically, this is to prevent multiple lending on the same property. And one more thing, it is not necessary that you can lend. Once if you lend, that is all that can be there. There could be multiple mortgages also on a single property. Suppose I have a property of 1 crore. From a particular institution, I could take 20 lakhs. From another institution, I could take 20 lakhs. So these kind of mortgages are also possible. So what is the amount drawn? What is the value? For that to be known, you have CERSAI, which will be, that is the Central Registry for Securitization, Asset Reconstruction, and Security Interest. Then the last kind of transaction that is there, where the banker, between the banker and the customer, is a guarantee transaction. So here the bank provides guarantee. And what is this guarantee? Suppose I am constructing a particular road and I am taking up the project. So that has to be completed in 6 months. For ensuring completion of the project, the government may say that you should give me a bank guarantee, performance guarantee in the form of a bank guarantee of say 10 crore rupees. So if you are not constructing it within the time, the government will enforce that bank guarantee, invoke that bank guarantee. So here the bank as a guarantor promises to pay the declared amount in the event of customer's non-performance or breach of duty in a contract. So the terms of guarantee, this is basically a facility or a protection that is given for a customer, and it doesn't come for free. There is a fee that is provided. So this is a mechanism of banks to earn fee-based. It is a fee-based activity. It will be a fee-based activity only till the time that the guarantee is not invoked. If he completes the work in 6 months and then the bank guarantee, they will give it back and the period of the bank guarantee will be over and it will be cancelled. But imagine in 6 months he doesn't construct the road, then the government will write to the bank and say that you have given this guarantee, now pay me 10 crore rupees. So automatically the bank will pay the money. And who is supposed to be paying this money? You as a customer or the contracting party, you should pay. But in your place, the bank will pay. So the bank will have to recover that money from you. So now bank has parted money to the institution. So what is a fee-based business will now become a fund-based business. So now this will become a credit transaction. It will no more remain a guarantee transaction. Okay. So here the bank becomes a creditor. So these are the kinds of various relationships between banker and the customer, the duties, obligations, responsibilities, etc. So generally, what are the customer's duties or obligations to bankers? So depending upon the kind of accounts, in case of deposit accounts, what are the obligations or duties of the customers? One, he has to submit KYC documents and these have to be periodically updated because it is not a requirement for fun. It is a requirement under the anti-money laundering. It is an anti-money laundering norm under the Prevention of Money Laundering Act. It's a requirement under that. Then any changes, in particulars, he has to keep the bank updated. Then he has to maintain minimum balance and limit the drawals as per the terms or pay the fee penalty for whatever excesses that he does. Then he has to exercise reasonable care while issuing a check. This is a very important thing. One, he has to maintain a balance. Then second, he has to sign. Then he has to avoid corrections. Now, any correction other than the bearer cutting off and the date, the instrument is not entertained at all because of the check truncation system. Then the amount has to be written in words and figures. This is important because if there is a mismatch between the words and the figures, according to the Negotiable Instruments Act, the words and figures are supposed to be taken. Suppose you don't fill in the figures, whatever is written in words, you don't write it in words, whatever is there in figures will have to be paid. So in your own interest, while you are filling in a check, you write both the words and figures. Then avoid blank or post-dated checks. Then not be negligent in custody and issue of checks. Then diligence in account operation, that is they have to track and inform unauthorized transactions, periodically check balance and verify them. Then care in remittances. So whenever they are making remittances, they should ensure that they are entering the correct account, giving the correct IFSC number, etc. Then when they are dealing with the card transactions or transactions on the net, they shouldn't share their login particulars in case of internet banking, should not share OTP. They should not part with the card even if it is for his wife. Then whenever there are any unauthorized transactions that are taking place, they will have to inform immediately to derive the benefit of zero liability. So this is as far as remittances and transactions using internet banking, cards, etc. is concerned. Then they have to check and inform the bank in case of loss of card, loss of mobile, because OTP and other things come in the mobile only. And you could have a mobile app where you can access the account. So in all these cases where there is a check lost also, the bank has to be informed immediately and the card and the account has to be blocked in your own interest. In case of loan accounts, first they have to make the payment of the periodic installments as per the terms of the agreement, prompt payment of dues, and wherever there are any charges, ensure prompt payment of the charges. Then furnish proper security and advise the bank of any changes. Then advise the changes in contact details. Then ask for a loan statement and monitor the same to see whether whatever payments are there, whether they are getting reflected. If they are not getting reflected, then the bank will start keeping imposing charges, interest, etc. So finally, when you think that the loan is over, the banker thinks, according to the banker's book, the loan is still there. So this to be avoided, periodically check whether the amount that has been paid is getting reflected in your account itself or not. Then bring to the notice of the bank any discrepancies. These are the obligations that are there. Then in case of safe deposit vaults, pay the fees or invest in an FD where the interest will be in a position to service the fee in case of safe deposit vaults or lockers. Then exercise care while operating the vault. Then banks are also engaged in the business of third-party products, that is like insurance, mutual fund products, then portfolio management services, etc. In these cases, know that the bank facilitates and what are the obligations of the bank, be very clear about that. Then exercise diligence while purchase of the products, insurance products, whatever they give, don't take it blindly. See what is the product, whether it suits your needs, etc. And only then pick the product. Then be aware of the documents of customer service. That is, these are important documents which everyone should know about. One is the Banking Codes and Standards Board of India code. I talked about it during the Banking Ombudsman class also. Then Indian Banks Association has come with certain model policy documents. Those have to be known. Then there is an important document called Memorandum of Procedure for settlement of debt claims and for return of articles in safe deposit lockers in the event of death of the person holder. Then RBI's directions relating to customer service also, they need to be known. Then be aware of the redressal mechanism. So have a look at the Citizens Charter, how many days, what services they are going to give, what is the time limit within which they are promising, what are the rights that you have in relation to the bank in relation to your account, you need to know. Then what is the internal grievance redressal mechanism, what are the levels of escalation, then who is the internal ombudsman and how to approach him, then who is the ombudsman for banking transactions or for digital transactions. Then whenever, the most important aspect is exercise diligence before signing any document. Don't put your signature blindly. That is a very important aspect of customer-banker relationship. Now the next part is termination of relationship. So the termination can happen from the customer's end. It can also happen from the banker's end. So what are the events in which a customer can terminate a relationship? One, if he is not satisfied with the services rendered. Second, if he is not getting the desired facilities. Then third, if he loses confidence in bank's reputation or financial condition. And fourth, if he does not agree with the terms of the bank. So these are normal. Otherwise, you take a loan, you repay the loan and you get back the documents, the transaction will get, the relationship will get terminated naturally. But we are not talking about this kind of natural termination of relationships. We are talking about forced termination of relationships. So these are the exigencies where there could be a need for termination of relationship. So basically, wherever it is warranted, notice has to be given because there could be uncleared checks which could be coming into your account, or you would have given checks. If you close your account, you will not be in a position to pay them, and unnecessarily you will have to go through the problems. However, refusal to close or delay in closing the accounts is a ground on which you can go to the banking ombudsman for redressal. Then bank also can terminate the relationship. There are two instances where the relationship can be terminated. One is by operation of law. So basically, you will see that the reasons are those where you will be there is inability to contract. The second is because of unsatisfactory operations. So what are the events by operation of law the banker customer relationship will get terminated? First is death. Second is insanity. Third is insolvency. And similar insolvency in case of individual, winding up in case of a company, closing in case of a partnership. Then assignment. Then operation of KYC or AML guidelines. If you are not updating your KYC, your account will be kept in the inactive status, and subsequently it will become a dormant account. And afterwards, if you don't pay, it will go into the unclaimed deposits fund, etc. And if your account is having a lot of suspicious transactions, the bank can say that I am having more nuisance because of you, so I will close your account. So this kind of closure of accounts are also possible because of the provisions of PMLA Act, etc. Then if there is an enemy customer if a customer from an enemy country there, suddenly it has become an enemy country where there is a war, then that country, that account will have to be, the relationship has to be terminated during wartime. These are because of operation of law. And finally, because of unsatisfactory operations, you could also terminate the relationship. When the person is creating nuisance, coming into the bank and creating ruckus, etc., then repeated overdrawal. So he is not having particular balance, every now and then he is overdrawing on the account. So you can find that this particular person is not someone with whom I am comfortable having an account. I don't know when his account will be a loan or a deposit. So they can indicate that they can close the account. Then there is a repeated bouncing of checks or issue of post-dated checks. So this is possible where the person's financial background is very, very bad. So in those instances, the bank would want to do nothing with these kind of customers because they may land in a lot of trouble. So from that point of view, they may say that I don't want your relationship. Then customer is a fraudster or a cheat. So he could ultimately, for these kind of transactions, the bankers could also be liable. In which case, they don't want, they would normally not want to have much to do with these kind of customers. So, but here also, after 3 to 6 months notice, only they should be terminating the account because there could be clearing checks and inconvenience should not be there, and the balance of amount whichever is there in the account has to be returned to the person. This is as far as the customer and banker relationship, various facets to it, various obligations and duties to it. In case you have questions, you can address them to malik1969@gmail.com. Thank you.